And good evening, everybody. This is Michael Filighera. I am with launchable.signals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Thursday, August 26th, 2021. The markets opened up a little bit wider today. And what I mean by open up, they opened up the ranges that we have been seeing since Monday's high. And even though that we did get a new high yesterday, the market still tended to trade in a very tight range. I'm starting on the 4-hour chart tonight because I just want to do a quick review of where we are and what may or may not happen tomorrow. So I'm still showing all of this labeling basically because it is a very complex structure, corrective in nature, but complex structure. And it is where I've left the fourth wave. So I've stuck to that count. And within that count, we are now in that minor fifth wave to new all-time highs. And what that does tell us is that within that, we have completed waves 1, 2, 3, and 4 out of a 5-wave structure. So, and that's saying that if that fourth wave is complete here. Okay. So what we're going to have to do right now, and that's why this Fibonacci remains, this is a retracement for that fourth wave. Today, it came down and it held basically even into the close, the support at 15,267. It got as low as 55. So that's a fair break, but it recovered quickly, as you can see. Recovered very quickly and then came back down again and tested this level. So that was just a bit of a throwover, took it back, and then settled at this one. But we need to leave open the possibility that we're going to come down even closer to 0.382. The no break zone sits at 15,000. That still remains the same. So we're going to allow for some continued decline. Otherwise, I'm going to mark wave 4 can be done here or here in a small failure. And the market continues then to move higher. But this is what I would be expecting in this fifth wave to complete the minor fifth wave. So I'm looking for minute 5 up. And yes, it should break into its own 5 waves, but we run a very strong possibility that within that, the third wave will extend, or we can get a third wave extension and a fifth wave extension. So there's several possibilities as this final fifth wave up completes. Again, we're getting that that blow off type high that we often see and major tops. And that started on Monday. Now we kind of just hung in there and we're just kind of basically consolidating at very high levels above 15,200, which now seems like, wow, what a drop when we're sitting closer to 15,400. But we're still at extremely high levels that we didn't break until last Monday. So in 5 days, we've held above that level, anticipation for tomorrow's meeting. Now, or tomorrow's press conference. The meetings take place today, and it's really bankers and all kinds of other people. So there's going to be all kinds of possible leaks to the press when this thing's over. And so we could get a lot of like little blips and pundits and this and that all coming in, and I talked to my this and whatever. So wave 5, in my opinion, is going to be fast. If it's going to be based on news, it's going to be fast. But that news may happen in terms of little bits and pieces before the official press conference. So we could get a quick move, and the objective of wave 5 is to break above 15,397.98 and get itself above 15,400. Now, what I want to do is I'm going to open back up to the daily chart, and now I'm going to put our some different levels on, right? We can first, I need to just take off that particular one because we've already got that. Remove those drawings, the retracement to be gone. And now I'm going to put in the Fibonacci's for that minor wave 5. And let me see if I get this open a little bit. Yep, perfect. And what we're going to do is we're going to minor wave 5 is going to be compared to minor wave 3. That's where the Fibonacci relationships come in. And as soon as I get it drawn, we will review them. So this was 34. Thank you. Down to that 4. Perfect. So, all right. So now I'm going to go back down to my hourly chart. Actually, let's go back down to the 4-hourly chart. If indeed, we are getting in to finish that 4th wave, then we're going to get a pretty strong rally. And here are our resistance levels. Now, the first most common between wave 5 and wave 3 is that it'll be 0.618. 0.618 is 16,000. We'll blast right through all the levels that I thought was going to really hold us back. Now, what also we can put in, and I'm just going to draw it and put it to today's lows. So now I'm going to go down to the 1-hour chart, because now we're going to start to build those layers. And what we're going to make an assumption on is this low completed wave 4. If it changes, we'll make that adjustment. But right now, we're just getting estimates on what could possibly happen to the market. Where can it go? All right. So first overlap, 15,524 to 15,531. That's our first overlap. And that's where minor wave 5 would be equal to 0.382 of minor wave 3. And this minute wave 5 would be 50% of minute wave 3. So we're actually basing the minor wave and the minute wave on the same Fibonacci extensions. And now we're going to see where they start to overlap. So we got one right there, 15,524 to 31. That could complete the whole scenario, be done. Our next one for the minute wave 5 is 618. That's at 15,596. Our next overlap comes where minor wave 5 would equal 50% of minor wave 3 at 15,783. Minute wave 5 would equal 100% of minute wave 3 at 15,806.75. This becomes a strong candidate. Wave 1 is the shortest wave. Wave 5 can certainly equal in length wave 3. In fact, wave 5 can continue and still be within Elliott rules and guidelines and not breaking any of those rules. So let's continue. We get a massive 5th wave. Our next level, which is the most common for the minor 5th wave, is that it is going to equal 0.618 of minor wave 3. That's at 16,042. And minute wave 5 would just equal 1.382 times the length of that 3, not uncommon, at 16,017. We have additional crosses. In fact, that zone just really exploded. Now, what does this mean? If this reaction is this severe, it's going to be a blast to trade because the move will be so quick, you just get in and you'll make thousands of dollars because there will be, and it's really going to be a panic produced by computers because they're going to be pressing that buy market. And if you're looking to buy 500 futures, 100 futures, or 100,000 shares of Apple, or whatever your situation is, that's going to produce a big spike in an index, and they'll be buying it at the same rate. Okay, so we start to have a lot of overlap, and it's all within the realm of reality. But wait, there's more. Minor wave 5 would equal minor wave 3, and again, we've already balanced it out that minor wave 3 is right now the longest. So as long as we can equal it, and we're not breaking any rules, I'd have to go back and look at wave 1. Minor wave 1, I do believe was pretty big. So, but here again, it's just at 100% at 16,881. These are incredible levels. And there's enough pent up energy that who knows? Now, those upper levels, I really would not expect them to be tomorrow, but they're going to have to see something that is so positive that it pulls every single bear back, whipping around, scrambling to cover a position. Because it'll be total evidence that whatever the news is going to be supported. So it's truth. Now, it's if we just sit rationally and look at what physically is happening in our world. I mean, we had terrible things in Afghanistan at the Kabul airport, where there was a duel suicide bombers, and the 12 servicemen were killed, which is tragic. It's a tragedy, and it's upsetting. And the market let us know today. That quick decline that we got off of the morning high to the morning low happened on that news. Boom, down she went. So there still remains a lot of things in the world that could cause a lot of problems and headaches and downfalls for the market, simply because it affects us and it affects the economy and et cetera, et cetera. So our reactions tomorrow are going to be based on, I think there's a lot of pent up buy and sell energy. Some of it was released, some of it was released, some of it, but I don't think all of it. I think it continues to wind up because these buyers were just as strong and stepped right back in and got it. If they're going to be proven to be wrong and they have to start flipping their positions, you've got a lot of buy energy to unwind to the downside. Conversely, if it starts to rocket, you've got sell energy and also buyers taking profit energy, but this could boom, and you've got all them jumping in. If it goes in the other direction, the buyers are jumping, and the news is disappointing, and everyone has to change their position. So you see, we're getting it from both directions. I do believe there's been a buildup. So tomorrow is that news, but tomorrow is also just a weekly expiration cycle. And we already know that a lot of the bigger firms, they look at where their big positions are, and they're going to manipulate and hold because that's to their advantage. They'll tell you, no, we don't do that, but it's like, yeah, I get it. But all those position adjustments that you're going to have coming in a reaction to what's happening to the market. So a lot is going to aggravate direction tomorrow. What would be a huge disappointment was that nothing happens and the market moves sideways and slow. That would be a disaster. Initially, you get a reaction and then nothing. Reaction up, down, nothing. That would be a massive disappointment to me. In any case, tomorrow, we may continue to see some downside. I believe it will be limited and it should be held pretty much close to where we also made our lows today. I am not looking for a major breakdown until after we get all the news. Then anything can happen, right? But we have our upside potential. And again, if this is the end of 4, wave 5, these are minimums here. And these are areas that are going to be able to complete it as well. But we're getting up into these zones that look pretty good. This one in particular. So from here to here, and that's 200 points. So depending on the news, again, this could start overnight because they get the chance to go and start adjusting their positions, plus react to their own markets, and then how that relates to the US. So a lot can happen, a lot's going to happen. You get that move up, be very careful, increased volatility and distance covered. You've got to really pay attention to your risk profile. If you happen to get in position and the market turns against you, for example, you buy it because you feel it's still going to go up, but it's just at a turn, both buys and sells are going to have stronger volatility. There'll be vacuums where the bids are gone and the sellers just sell at the market and they're zipping down to hit what's available. So you can see gaps down, gaps up, because of the vacuums that are created between when these orders hit the market. So we need to be careful, and you may need to expand your risk profile. You may have to cut down your size. You may need to go to the micro contract. You'll make plenty of money in the micro contract. And if it will make you more comfortable, not to watch your P&L go up by thousands of dollars, but rather hundreds of dollars, then that's much more manageable. And you're going to learn to trade that type of movement. If you have tons of experience, go for it. Because I think tomorrow I think should be that day, should be a day where we're getting a lot of movement, we get a lot of volume, and it's just going to be good trading. That's my wish, that's my hope. I'm going to leave it there. We've got downside scenarios. Again, well, wait a minute, let me add one more thing. The no break, as I said, 15,000, that's a no break zone. If this thing takes a nosedive and it's heading for 15,000, I don't care. These are all done. I can move that 3 over here. That's a 4, that's a 5, that all can be done. We're trying to follow what the market is telling us. But we also I can pull it all back and declare it done there. I think we still have more. But if the market tells us no, I'm not worried. But if it breaks there, here's the catch. When it breaks there, it breaks an Elliott rule. An Elliott rule is that a fourth wave can never break into the price territory of wave 1. It's no longer correcting wave 3 when it goes more than 100% of that wave. Same concept is like a second wave cannot retrace more than what the first wave created. So same concept. It's not a fourth wave. That takes us to back. Then we're not going to worry, nor should you. If it's coming down and you see that it's breaking support that maybe it shouldn't, you're looking at these levels, go keep an eye on your moving averages. They're going to tell you the story. And then keep an eye on your moving averages on the hourly, the daily, and if necessary, the weekly, particularly on the daily. You're going to look where that 8 and 20 and the 50 are and how close they are to it. And when they start to break those levels, it's showing you weakness in the market. That's on your daily. It shows you weakness in the market. Don't ignore it. It's not meaning that the market's going to turn, although it might. And it's not meaning that the volatility is going to get less. It'll get bigger. And that remains in both directions. If the market on the daily level hits a support level and everyone sees it and everyone believes it and flips the market, they will roar the market back. Okay, this is just the nature of what will happen when we have that increased volume and they're fighting for direction. I'm leaving it there. Have a great trading day tomorrow. There will be plenty of opportunity. Manage your risk, manage your position sizing. And the next update will be on Sunday.